Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Man, I tell you what, the intro thing seems to be going a lot oh, wait, that's not what we want. Well, let me get the right music on here. Seems to be going like faster than I anticipate lately. Well, you can see here this morning, we did have a decent rise in the treasuries. So we're kind of back here. I would like to get back to like the 21 area, but hey, we do have a little bit more going on this week, and it's like the end of the month now, so we're getting right back into economic data again this Friday and so forth. So good morning, Don, Dom, and Barth. Barth, that's a new name. Welcome to the stream, and congratulations on being here right at the beginning, right on time. Yeah, let's go to the charts and see what we are looking at here, huh? Okay, so we got a lot of rollovers here. Oh, I did not realize. Dude, I'm so stupid. Of course, because it's going into March. It's 3 days. Okay, yeah, it's time to roll over. Roll over. Let's see here. Let me pull up the calendar real quick. Yeah, tomorrow is third day before first nose. Okay. So, coming to the volume profile here, we got the treasuries, and you can see pretty decent rise on Friday. And then fairly, like, nothing too big overnight. I think that spread thing is all messed up just because of the rollovers and so forth, right? But we're on June now. Here's ES. ES kind of peaking on Friday, coming down a little bit, but you know, maybe some signs of them trying to pull something out and start things bullish again today. So oil, okay, oil's been in a range here. We're at the bottom end of this range. Pretty big decline overnight. Very curious. I didn't see any like huge news in the oil market, but there's still a lot going on over there. Still Houthis shoot missiles at people and all that sort of stuff daily. Here we got gold and silver, though. Gold and silver is still relatively high. So I think that gold is relatively high compared. Well, I guess the treasuries came back a lot on Friday, so that's probably what that was. But there's some other disconnects. I think that the risk premium from geopolitical concerns is still there. Okay. Silver's not doing quite as well as gold, so silver is kind of more of the risk asset version of gold, right? So Kappa still, you know, they had a good run last week, but they're still kind of struggling, I think. And then the dollar and the Japanese yen. Well, the dollar did decline last week, but yeah, they're not able to stay below 103.5 as of yet. Bitcoin just still going kind of sideways. There's like attempts to pump it up, but then it comes back. So that's where we're at. So first thing is, I think we should look at switching. So this is on H. And I forget what so I'm trying to test my memorization of the futures month codes. And I think that May is K. So is June M, I think. Oh, Brad said it like just as I was thinking about it. I remember like May is K, but then there's another skip. So June is M. Yeah. So let's switch. Let's take a peek. We'll do it in ZN here. Let's look at June. See if the liquidity is any different over there. Okay, so there's a lot less liquidity in June right now. So I think that they're probably going to continue to trade that today. It's the third day, so it's 3 days before first call. 1, 2, 3. So I don't know why Ninja Trader is telling me to roll over today, but it doesn't matter. They track each other pretty closely at this point. It shouldn't matter. But I think that we will switch over the main treasuries tomorrow. And then I got to remember on Friday, we have to switch to micros. So yeah, let's switch this back. There is some interesting stuff in the front month though, isn't there? You're not supposed to tell me. I'm supposed to have them memorized. Man, I don't know what I did, but when I walked out of the shower, like I tweaked my back or something somehow, because all of a sudden I got this knot in my back and it feels really tight. And I'm hoping that if I just ignore it, that it will kind of like stretch out as we go, but I'm kind of wondering if I should go and get the foam roller and try and roll it out again. That's what we have computers for. Well, I find that memorizing things is really valuable. That's one of those things that is so like phone numbers, for instance. Like I have my phone and my wife's phone number memorized. I don't memorize anything else. I think that that's a pretty good like phone numbers, only the super critical ones that like you would need to know the phone number without your phone. Everything else doesn't matter. But I think that there are other things that are like pieces of knowledge that if you memorize it, you can integrate it into your models and so forth in your brain more effectively. And so there are some things that I think are worth memorizing, let's say. And I feel like that the month codes is maybe one of them. Maybe I'm wrong, but it's never really mattered too much before, so. Okay, well, I'm going to come over to Zero Hedge. See what they got going on over here this morning. CIA built 12 secret spy bases in Ukraine and waged a shadow war for at least a decade, bombshell New York Times report confirms. Well, sure. That doesn't surprise me, at least. It doesn't surprise me, at least. Market cracks below the surface as collapsing big money breadth sparks major bearish divergence. MSNBC claims Trump's numbers in South Carolina are disastrous despite defeating Nikki Haley. Well, I don't know if any of the numbers coming out of that contest in South Carolina mean anything, to be honest. What do they think is weird? Oh, they're looking at like Trump versus Biden's performance in the primary. That's funny. Okay. Morgan Stanley on Fed independence before and after the election. This actually is an interesting subject. Like normally I would be like, I don't buy this sort of idea that like the Fed needs to do this or that for political reasons. But I do think that the Federal Reserve members can be prone to, let's say, like biases and or influence. But it's kind of like maybe more subtly going on under the surface. They're not saying like, I don't really want to do this, but I should keep rates low because it's an election year. I don't think that they think of it like that, but maybe subconsciously they do. And I do kind of see this thing where it feels to me like the market overall is more dovish than it should be based on the current data. Like they're all saying, we need to cut interest rates and normalize interest rates because they've been so high and we've defeated inflation, yada, yada, yada. And I look at it and I'm like, well, inflation could come back and it looks like the neutral interest rate has maybe risen. So maybe the rate that we're at is the correct one, is kind of what I'm thinking. Like, I just don't see the rush to reduce rates until I start to see like any kind of a sign of like now is the time that I would expect to see like economic weakness from the high interest rates starting to hit the economy. Definitely into March. Like if we get to the end of March. So I tell you what's coming up here is we get this whole thing where the BTFP program expires and the reverse repo facility will supposedly be emptied and the government won't be able to spend as much money. There's also a like a funding deadline for Congress coming up here as well. And so those things are all combining into like a pretty big risk event for markets in March. But since it's like a long time coming, we have a ton of time to prepare. I think that you probably could see some market turmoil around that time, but I don't think that anything bad is going to happen. So you get to the end of March and everything's fine and growth still looks good and everything. How do you cut interest rates? I don't see it. I just don't see it. And so I kind of suspect that those that are writing this on the theory that the Fed will run the economy hot into the election might be disappointed. Wow. San Francisco hardware store implements one-on-one shopping with employee escort due to rampant shoplifting. I'm going to go get my foam roller and try and roll my back out again here. I'll be right back. Yeah, I think that muscle is just getting a little tight. Well, treasuries have been pretty tight since the open here, but it is kind of slightly to the downside. Slightly to the downside, but this recent little run up here was a little bit stronger in the 5-year. I don't know. The downside has been more flattening. So if we wanted to see downside, I don't think that buying in the 5-year would be what you want to see. So might see they might be trying to push the top end of the range here soon. Well, I'm going to come over here to Reddit, see what's going on over there. My eyes are watering a little bit more today. I think that means that spring is coming. I don't know about where you guys are at, but it was really, really nice this weekend over here in Utah. 50 degrees, bright and sunny. There's another little uptick through a decent amount of volume at 30.5. No, I think it's been more than I'm looking at the moderator stuff now, and I can see Robot has been doing a good job catching people pretending to be me. So it's been, I think, more than 2 weeks. So I think that means that there's something wrong with Debian, and I don't have the same problem in Arch, and that my Kubernetes cluster is working really well. So I should be happy. Well, browsing through Reddit, and it keeps showing me the Helldivers subreddit, and I'm just astounded by how much activity there is there. That even relatively innocuous threads have like 600 comments on them. Oh, hey, Africa StarCraft League. New episodes today. So I'll probably have to wait a few days for the English, huh? Well, I think that on the news front today, went through Reddit. I'm looking here at Twitter now. Not seeing a whole lot. Let's see here. Joseph Wang, great overview of the multi-strat funds and how they may be managing volatility. These asset managers have similar short horizon risk management policies and control of a lot of assets. So when caught off guard, they may all have to quickly close out their positions at once. Oh, actually, there is some stuff here on Twitter. Anthony Crudelli trending higher. If you look on social media, there's a fascinating number of people who want to call top, but tops are tough to predict because we don't know how much later if they are really a top. We also have specific conditions I look for when tops are made, and right now, the market is just not meeting any of those conditions. It is just trending higher. What's the plan? Go long on the strongest market, which is NQ. I say that in any trend, I prefer to go long on the strong market or short the weak market in an upward trend. You don't fade the strong and buy the weak. You buy the strong because it tends to go higher for longer than anticipated. Yeah. You know, last week was kind of one of those spots where we thought maybe that there would be a turn in the flows and it didn't happen. Now I'm kind of thinking, like, if there's a turn in the flows, it's probably not going to be until March. And this move that we're seeing this morning, you know, it looks like they're trying to pump it up ahead of the open. And I mean, this is relatively early. They don't really get started over there in the equities for another 15 minutes before those traders like come in and really start doing stuff. So this trend that we're seeing right now is a little curious, I think. It's a story about a 25-year-old setting himself on fire to protest what's going on in Gaza. And I find it kind of curious the number of people that are actually interested in that, because I'm kind of like, okay, we'll protest all the time. But I don't know. I guess setting yourself on fire is relatively, in the past, tends to attract attention. But the left seems to be like laser focusing in on that today. So he was an active duty Air Force soldier and he did it in uniform, and you think that that's what makes it more of an attention grabbing headline? I don't know. No, I don't need the video. So you know, now that you've commented, I was thinking about something, about a conversation that we had a long time ago. Because I was thinking about this thing, and I read an article yesterday that made a certain point, and I thought, was my stream trying to make this point to me earlier, and I just didn't understand it? But I just didn't remember any details about the conversation, so I couldn't remember. But you might find this one interesting. So a story that I'm seeing get passed around is this article, and man, I can't even remember where I read it on now. I think it was The Atlantic, but I could be wrong. But basically, it was this author had, and I think it was kind of a left-leaning author, by the way. He had this theory that the rich is adopting luxury beliefs. So, like, as a rich person, once your basic needs are met, people tend to turn their attention much more towards social prestige. And so one of the things that you do is you buy things that only rich people can buy so that everybody knows that you're rich, right? And one of the things that's happening is it's getting harder and harder for the rich to differentiate themselves based off of, like, for instance, what they're wearing. Because, you know, things are becoming so cheap and anybody can buy anything. So he believes that the rich is adopting luxury beliefs instead. So that it's like people can tell that you're rich based on certain beliefs that you have and political beliefs that you have. And all of these luxury beliefs that they adopt are beliefs that basically incur no cost to them. So like a really good example is to abolish the police, or what was it that they were saying they should do with the police? But, you know, this whole idea that we shouldn't have, that the police needs to change and the money needs to go into something else, and that there shouldn't be as tough of enforcement in inner cities of the law, essentially, right? And when you actually like look at the polling, it's the rich people, it's that went to university and so forth, that support these policies, and the people that are actually in the areas and would be affected by greater crime don't want it. Or another example that they use is of the family. The people that are college educated, particularly at the Ivy League college level, okay? People that are at the Ivy League college level are more likely than the rest of the population to say that marriage is an outdated institution. And yet, they are also more likely to come from a married family and to get married themselves. And I think that was the thing that got this author to start wondering about this thing, is he said, well, why do they say one thing and then do the other? It's because it's a luxury belief. There's all of this data that shows that being married is good for you economically, and that people tend to make more money once they get married. And there's some evidence to suggest that it's causal, that getting married causes you to start making more money. That's why all white liberals are the only socio-political demographic that have outgroup preferences. Right. So we've talked about this before, and we've talked about how it's like, oh, you know, the people that are saying this stuff aren't affected by it. So they don't have any skin in the game, and that's how they're able to have those kinds of beliefs, right? But the author of this article was saying that, I think that he was kind of saying in a way that they adopt those beliefs because they don't affect them. It's basically the reason they're adopting those beliefs is for the social reasons, and because they believe that adopting that belief gives them greater social prestige. Because they're rich enough to afford to believe that, right? Like, being concerned with the poor is like a big signal that you're super rich, because that means that you've got all your stuff figured out, right? It is a luxury belief is what they call it. And I think that when we talked about this before, I was just trying to make the sense that the argument that because they don't have skin in the game, they don't really understand certain things. And I think that maybe you guys are trying to say, no, they are adopting those beliefs because they harm the poor, not necessarily because they're thinking in their head, oh, this will harm the poor, etc., etc., etc. But because it's something that you know, affects the poor more than it affects them, believing that is kind of like only a rich person could believe that, and so that's why they believe it. Like, they're not believing it because it's really truly the best thing for society. They're believing it because it makes them appear richer. Yes, it's like people who are least vulnerable to price instability tell people most vulnerable to it that price instability is their fault. I think of it like, I think the one that was literally a headline. Yeah, well, I have seen things about like inflation is your fault, right? And this journalist, yeah. So this guy was making a secondary argument that he was basically saying that the rich are adopting these luxury beliefs and pushing them through their political donations and so forth, and causing chaos in our society because of it, right? Which was kind of a thing that we've all been saying, but I think it's curious that his argument is that the rich are doing it to make them, for social prestige, and not because they truly understand and believe that it's good for society. And that's a curious, because if that's really the cause of all of those things, how do you deal with that? Other than you have to change the culture to be, and I kind of realized as I was thinking about this, let's see, the weird part is average and even poor people adopting the same beliefs and then carrying it the same way, it makes them look good and smart because rich people have them. Yeah. So I started thinking about it from two perspectives. One was from me, and then within the trading community and people that I look at, because I feel that I'm in a kind of a little bit of a strange spot, because I grew up, I would say, upper middle class. So we were fairly well-to-do, but it doesn't result in the same set of beliefs because I'm from Utah. So in Utah, it's still like the what would we say, the rich people kind of belief is still very much the Reaganite, free market is best, kind of traditional Republican tilt. Because you still see among here, I notice that the more rich a person is, the less likely they are to support Trump, for instance, right? And it's just kind of like there's this kind of like this underlying visceral emotional reaction that doesn't seem to make sense based on like the logic that they're telling, that a Republican candidate being poor with his having bad morals or having done this particular thing doesn't seem to evoke the same reaction out of them when other politicians do those sorts of things, right? Upscale influencer, yes, people in your position, if popular enough, can get away with it, and people can do just about anything. The dynamic is very similar. Yeah. Anyways, and then the other thing is that even if I'm considered like upper class, like what is upper middle class in Utah is nothing compared to what is upper middle class in New York, right? So I kind of end up being like, I have this kind of mindset that I think was developed from growing up fairly well-to-do, but I still get lumped in with the working class by the larger like cultural zeitgeist, right? No, I'm talking about like as I grew up as a kid, because part of the thing that this guy is saying is that like there's so many like subtle things in it that they basically have it set up so that you can't fake it, that even the people that they come into the money later, they can tell that they were new money, that they're not old money or whatever the deal is, because they won't have the right mannerisms, they won't have the right beliefs, etc., etc., etc. They won't speak the right way, that sort of stuff, right? So for me, even though I did grow up, I mean, my parents paid for my school. Okay, I didn't have any school debt, for instance, right? That makes me I grew up pretty rich, relatively speaking. I mean, I don't think that was because, my parents saved up for it. They were very smart on those sorts of things, but it did put me in a much better position than most people. But if I went to the parties, nobody would see me as that, right? And then I look at I think that there are like luxury disbeliefs too. Like there's certain things where people don't want to know about it, that they say, I don't know anything about that particular thing, because they believe that it gives them more prestige. Like you're a rich person, so you wouldn't concern yourselves with that. And I think that traders do that sometimes. Is when they say, like they're a technical analysis trader, they think that all of these successful traders in the past, that they didn't know anything about what was going on in the markets and didn't care. And that might be the case for some of the momentum traders. But so they adopt this position of, I don't know anything about the news or what's going on in the market because they think that it's more prestigious that way. You get what I mean? Things to be not my position as a YouTuber, because I'm a super small YouTuber. I know. Like that's the other thing, is that I am doing pretty good right now, but most people, influencers, would be like, doing everything they can to wealth signal so that people will watch their channel. Because it does seem to me that the wealth signaling does get people to watch your channel. And maybe I should do that. Maybe I would be more successful in doing that. But I have no interest in doing that. And I'm way, I would very much prefer that everybody thinks that I'm dirt poor. I think that's better. Like trading kind of ends up being this enigma in there where how rich you look doesn't necessarily change your trading. I mean, how rich you look might affect how much money you get to your hedge fund. So from that perspective, I need to work on that. Probably I need to start doing some more networking and changing my wardrobe. I have some goals to kind of level up my wardrobe, to get people to invest in a fund. But in the trading itself, what other people think about you doesn't affect how you perform, right? And it's actually kind of to your advantage for everybody to underestimate you, essentially, because otherwise they start following you and it can potentially mess your trading up. And so it's kind of a weird thing, I think. And that's maybe why I didn't see it. But I would still say this is very much a theory that this guy has. But it's one that I find a little curious and that I think explains a number of things that don't really make sense. Like in particular, something that doesn't make sense to me is how the left became the authoritarian class. When I was growing up, it was all about that the left were the ones that felt that freedoms were under attack and that freedom of speech was important and were anti-war, etc., 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 and concerned about privacy is another one. And now you come into today and somehow after the Obama presidency was where it kind of shifted, and then under the last 8 years between Biden and Trump, it's kind of solidified that now it's the exact opposite, that the left is completely in favor of limiting people's freedom of speech. We're finding all of this stuff out about how, for instance, when the Hunter Biden story came out, that they kind of activated systems that they had in concert with Facebook and so forth to stop the spread of that story as Russian disinformation, all of this sort of stuff. It's completely the opposite. And I'm like, how did that happen? But if you step back and you say, well, what happened was the money changed towards tech, and all of the tech people are the ones that have the money now, then I think it kind of makes sense. That then a certain set of beliefs became associated with having the money, and then that starts to become its own self-perpetuating cycle sort of a thing, where they all believe the things that are most convenient for the rich. And there's one thing that I think doesn't make sense still, is if that's really the case, why does the left not see it more? Like wouldn't all of the poor people see this going on and say like, hey, wait a second, the left isn't really actually my party anymore. They're more about the interests of the rich. And I guess some people do to some extent, but I would say that largely speaking, they still vote Democrat. You know? I try to listen to conservatives and lefties, and it's funny when Jimmy Dore and Tucker Carlson start saying the same thing. I don't know who Jimmy Dore is. That's funny. Mornings, Mohammed. Welcome back. The Tucker Carlson thing is kind of interesting to me. Like, I mean, Tucker Carlson, he comes from money, but he has definitely become like the far right kind of let's not say spokesperson, but like he's the biggest journalist on the right now for sure. But his approach to things is often very much like what? And I come back to it. It's like, well, I think that the understanding is different. Like, I often find myself explaining these kind of, so like going back to the luxury beliefs thing, right? A lot of this in terms of luxury beliefs and luxury knowledge are things that they learn at Ivy League universities, particularly in the humanities, because who goes into the humanities unless they're already rich? Because even going back several decades, everybody knows that you don't really make money in the humanities, right? That maybe you graduate and you go into something different, or you just stay at the university, right? So there's always been certain jobs that or certain fields that you don't go into unless you're already really kind of rich, right? And so knowing about these things, like knowing what is critical theory, kind of associates you with being upper class, essentially, right? And so I find myself all the time thinking about terms and how they're defined and like relating them to people, because the people that I'm interacting with don't understand them because they're coming from more of a working class, middle class kind of mentality. And I'm realizing now that it's like, oh, well, it's because I consider myself like college educated and extremely well read, right? And so I understand those terms, and I'm realizing now that like knowing all of those things is kind of like a luxury knowledge, actually, right? So like, but I would think that Tucker Carlson would understand those things, but then I constantly see him saying things that I'm like, well, but that's not. Like the one where when he went to Russia and he was all like basically spewing Russian propaganda, like, saying that food is cheaper for Russians, but he doesn't understand that Russians don't make as much money. It's just like, Tucker should understand that stuff, and he doesn't. What's with that? Is he just playing dumb for Russia's sake so that he could have the interview or something? I don't understand. Yeah, look at the border crisis. 10 million poor people dropped them into the country. Doesn't affect them. They're too high on the food chain, so they don't think it's a bad thing. But it's not. But like again, so this is interesting because you're still on the track of that there's this ignorance. There's a substantial degree of ignorance, right? But I don't think that they are ignorant anymore. On that particular issue specifically, I don't think that they're ignorant. I think they know that they are importing millions and millions of people into the country, and that it has a substantial negative impact on the people that, people that are on the border, people that are in New York are the poor, these middle class kids that I have to go back to work from home so that they can house migrants. They know. And you know what they're saying? They're saying, well, we can afford to do that because it's the right thing, right? Because only a rich person would have this mentality of, well, it's fine. We should take the L for the betterment of other people, right? Only a rich person could believe that, because the poor person is the one that's like being negatively affected by that and like being held down by some of these things, right? So they believe it in part because it's so harmful to, you know, the other poor people. Yeah, and it's not that they're trying to keep the poor and middle class down, but rather they know that only a rich person could afford to believe that. And so that's why they believe it. Get what I'm saying? They know it's negative, but they're willing to accept all of those negatives because they think it's virtuous. But that's where I kind of come to this different conclusion. So like, my thinking is now, if I care about the poor, the best thing that I can do is get out of their way. I think that if you take all of the, you know, the assistance, and I think that a lot of these things just hold people back, and all of this kind of like higher level societal assistance, it just doesn't seem to be very effective at doing what we're trying to do. I think that you get out of the way, and let people create their own economic opportunities, and they'll do it. Like I really think, just keep crime down so that they actually have an environment where economic activity can grow, and it will happen. Well, I wouldn't say I'm a libertarian. No, definitely not a libertarian. But I do think that a lot of this assistance intended to help the poor is really motivated more by people trying to aggrandize themselves rather than actually helping somebody. And that you're much more able to help somebody by getting out of their way, you know? We need to get out of the working class people's way in a regulatory sense. I agree with that. I am not a libertarian, because the key like differentiation there is that the libertarian believes that the market is perfectly efficient, and that if we just let the market work, that everything will solve itself. And I don't believe that. The market is extremely inefficient and is very prone to endogenous volatility. Like that basically from within itself, it will always kind of have a tendency to blow itself up. So you have to, I guess the thing that I'm trying to say is that there's not like some perfect system, right? Like if God himself was on the earth and was running everything and was running the economy, how would things be different? I think that you would still have free trade. I think that you would still have periods of strong growth and not strong growth. And there's not like some sort of a system that perfectly, some set of rules that perfectly accounts for every possible little problem that comes along. I think that you have to look at each problem individually and just choose to do the right thing, right? Like if I want to help other people, I should just like be involved in my community, like actually like doing stuff and being social with other people and being involved. Because if I'm like just throwing money out at the national level, I don't know any of these people, right? I don't know what's actually good for them or what will help them or what their specific challenges are, right? It's really more of you need to get the governance closer to the people. Government closest to the people governs best. Let cities and counties and states have more control, and the federal government needs to be less involved. And, there are some regulations that are necessary, but like we have to be smart about it. And I don't think that we're smart about it. I think that there's a lot of people that just want to give the government as much power as possible. And I don't agree with that. Right? So I'm not a libertarian. What I am is I'm pro local government, and I'm pro smart government, I guess you could say. For a libertarian, it's very easy to be a Bitcoiner. Okay, this one is, I think, kind of weird though, because I really think that when Bitcoin started out, it was not the libertarians. I think that when it started out, it was very much the Occupy Wall Street, far left kind of people that were most interested in it. And even though it is much more naturally a libertarian sort of an idea, and so over time it kind of morphed to that. So I see this now where there's these people they're always disparaging Bitcoin as libertarian, and only ignorant conservatives do it, right? So it seems to me that this is another potential luxury belief that the rich, the old money, don't really like Bitcoin. I kind of think of it now as like, okay, based on me thinking that I'm so smart and know everything, like what is my natural inclination about a particular issue? Before I really think it through and use logic and empirical evidence to figure out what the truth is. But if I just go with my first kind of gut reaction, that may actually be, I may actually trend towards a luxury belief. Is kind of what I'm thinking. So I don't like Bitcoin at all, but I think that perhaps that is in part because, I've worked for a bank and I understand all of these things about the financial system and yada yada. It's because of my luxury education, essentially, that I come to that conclusion. Perhaps. So it's kind of interesting because it is a theory, so I don't know if this is all true, right? But it's just if I assume that it's true and then I start going down through it all logically, does it actually fit with the world as we understand it? And it seems like it does so far. And it's kind of a problem, I think, because I think that kind of means that in order to fix our political problems in the United States, that makes it very difficult. You got your George Soros out there, that he's doing all of these things because he believes that that's what he's supposed to do as a philanthropist and all of that. But it's causing a lot of real pain and chaos in our society, right? Especially in those cities. They're taking a hit. And I think that these people just think, oh yeah, there are some negative impacts, but we have money and we can afford it, whatever. But we should help the poor people, even though you're not going to do it. Or it's just they totally support saving the environment and reducing carbon emissions, but then they fly private jets. I would like to have a private jet. That's because I'm not really sold on that. Well, I don't know. Maybe I shouldn't have a private jet because of the carbon emissions. I'm not entirely sold that your private jet actually matters. I don't think Satoshi had any ideological inclination. However, the early cypherpunks were anarcho-capitalists, starting from Timothy C. Yeah. So I was reading about this the other day because there's a lot of theories about who Satoshi was, and there's two guys, but basically, because of the knowledge of cryptography and so forth that you would need to have to be able to invent Bitcoin, it really narrows down the field of who Satoshi actually could have been. There's only a certain number of people in that community because it's a very, very small titan. Like, we're talking about like several dozens of people in that community. And you're right that, like, what are their ideological inclinations? It's the community is more about the interest and belief in the importance of security and privacy, right? Anyways, I read this thing and they made a pretty effective argument. I think that it was a certain person, and that person died, and that person died around the time that Satoshi went quiet. So there's two people, and one of them, a lot of people believe it's that guy, but that guy actually has like emails with Satoshi, so like he'd have to be like emailing himself to be doing that, which he could totally do. But I think that the other one is probably a better candidate, but I don't remember their names. But I do think that, and so now I kind of understand, so here again, using the lecture belief system, I think it does kind of explain why, like, Republicans are starting to become more pro-Bitcoin and the liberals aren't, because being anti-Bitcoin is a luxury belief. Right? Like, they don't believe it because they really think that Bitcoin is bad and all of these sorts of things. They believe it because that's what the rich believe, and they think that by believing that it signals to other people that they're wealthy. That subconsciously, that's why they're doing it. Austrian economics. Oh, you know what? That reminds me. I had a post on that subreddit the other day, and I want to go and see how it did. How much did they downvote me? Dun, 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 dun. -7. That's not too bad. Were libertarians. It's interesting that you use that terminology. See, in my opinion, so here's the thing. Austrian economics is not rooted in empirical science. The whole premise of Austrian economics is basically economic systems are too complicated for us to be able to analyze in that kind of a way. And so any kind of numerical model that you can come up will be ineffective at being able to predict what the economy will do. So instead, what they do is they say, let's just look at what kind of motivations and incentives that people have. And then when they all start to act on those incentives, within, millions of them do it, then how does that play out, right? And so then they're using logic, essentially. They're setting up a scenario and they're using logic to say, how does this actually play out, right? And so essentially, Austrian economics ends up being really more economic philosophy than it is economic science, because they essentially believe that economic science is ineffective, and so we have to take the philosophical view of it, right? And the issue is that like 200 years ago, that made a lot of sense, because 200 years ago, we didn't really have the kind of data to be able to even look at things, right? And so that's why Keynesianism kind of won that battle, was because the Keynesians actually came out with models that were backed up by the empirical evidence and then got put into policy and were found to be policies that were somewhat effective in accomplishing the thing that they wanted. That when you do government spending does stimulate the economy to some extent. Well, not to some extent. It can have a very, very strong impact on the economy, in fact. That doesn't mean that the economic policy that we use today is doing it correctly or effectively, but it's unquestionably, especially after 2008 and after the COVID crisis, Keynesian economics stimulus in the short term stimulates the economy and does help the economy, right? So that's why they won, and then Keynesianism, or sorry, the Austrians just kind of died off. But like the thing that I think is interesting today is that now we have the computing power to kind of test the Austrian way of thinking. Is we can come in and we can say, here's an individual person, and here are the different factors that affect the way that an individual person will make decisions in the economy. And when we create 1 million of those agents and we have them all interact with each other on a large scale within a computer simulation, how do they actually behave? And how does that match up with what we see in the market, right? We can do that experiment now because we have the computing power. And the problem for the Austrians, particularly now, is that when we do that experiment, it doesn't come out the way that the Austrians all believed. Because I think that the Austrians ultimately believed that people are rational agents, and that for the most part, people do what will be most rational and most optimal for them. And what the studies on this sort of thing using agent-based models shows is that you cannot get the behavior that we actually see in markets without causing agents to act extremely irrationally by and large. So the reality is that most people don't have a whole lot of information, and that the decisions that they are making are very irrational based on all of the all of the information available. Right. So the Austrians were wrong. Right. But I still think that it's interesting because, again, there's kind of this luxury beliefs sort of stuff going on. And so in academia right now, the research is very much going towards liberal ideas and ways of thinking. And there's conservative economic ideas and ways of thinking that aren't really being tested. And so the Austrians, or the people that, let's say, because I think the way that this really works is that people go and they say, I want to get into economics, and there's this political kind of side of it. So like, oh, okay, the Keynesians are actually liberals, so I guess I need to go and be Austrian because they're the conservatives, right? But the reality is that the Austrians died out, and that there hasn't been like a modern reincarnation of them. It's just a few people online, kind of praising this stuff that happened 100 years ago, right? The reality of the research today is that we've grown beyond both Austrian and Keynesian economics, because now we just have like all of this data and machine learning models and all sorts of tools that we didn't have before. So we're in a new age of economic discovery that is answering some of the market's most perplexing problems, right? Like we know now, and I would say I personally accept it as fact. I mean, it's still a theory, but I believe that we have more than enough empirical evidence now to say that most economic actors are not rational. We have enough economic evidence now to prove that the market is not efficient, that the market is not informationally efficient. I think that that's well proven now, right? We have enough information to explain the excess volatility puzzle, that there's more volatility than the information would suggest because it comes from the structure of the market and because the markets are so inelastic, right? So these are like the three biggest questions in economics since the beginning of economics, and we've solved them. And most people don't even realize that we've solved them. That's the crazy thing, is that we're at the beginning of a new age of economic understanding, and most people have no clue that that's what's happening. So that's why it's kind of like, it's not that I hate Austrian economics, it's that I want the Austrian economy, the people that are interested in Austrian economics, to come up to date with the current research and start contributing to it. Because you're at the beginning of an age of discovery in economics, and you're letting the left drive it all. Stupid. Let's see here. What do you think about neo-trading psychology gurus that are these days neuroscientists and even Freudian trading psychopsychologists, and Freud himself was a pseudo-scientist and dogmatist? Interesting that you call it a dogmatist, but the opposite of rational is not stupid and idiotic. It's the opposite of rational is random, I think. Nayib Bukele. Oh, wait, is that the president from Brazil? I don't understand what's going on in Brazil. So there was like big protests again, and there was this other report saying that Joe Biden prevented like a coup. I don't think that's who you're talking about then, huh? Okay, no. So I think that there are a lot of people in the trading psychology space. Basically what happens is, like, if you don't really feel that you have like a clear edge that you can explain to people, and you want to share information with people, it basically comes down, like, you will inevitably settle on psychology. Does that make sense? There's even some of these people that they're like, maybe they think that they're profitable, or they're having success, or they have some students that are having success, and they're like, well, why do these people have success and these people don't? And they don't understand it. And so when you do it that, you go down that kind of logic. Okay, well, maybe they're doing this, or maybe they're doing this, and you try all of those sorts of things and test them against the market, and you find that none of it really tells you anything. Then the only conclusion that you can come down to is, like, it must be their mentality or something like that, right? But the problem is that when it comes to day trading itself, in order to make money day trading, you have to have an actual real edge, which means basically you're either the market maker or you're the informed trader. So what is the edge that you're going to have that is going to give you an advantage over other market makers? That's really hard unless you're the fastest. Or you need to be the informed trader. You need to know more about the market than other participants and what could potentially be driving the orders and flows in that market from other people, right? The informed trader. So if you don't actually have an edge, no amount of psychology will help you. Because honestly, at that point, you're just a noise trader. And the results of your trading are random and will trend towards losing everything over a long enough time horizon. And if what you're trading is actually really random, that's going to drive anybody crazy. And so then, of course, you're going to be interested in the psychology, because what you're doing is literally driving you to insanity, you know? What I'm even doing here, if you can't teach me how to trade, well, the information that I have here on this channel would absolutely help you understand what's going on in the order book in the cryptocurrency market. And I have a substantial amount of reason to believe that that sort of stuff tends to be actually quite effective still in the Bitcoin market. But because of the amount of intraday volatility that you can get in Bitcoin, where one event can just be like absolutely insane, I would not really recommend trading Bitcoin, because at that point, it's basically like, even if you had an edge, it still kind of comes down to luck, because you can't control those really massive moves, and any one of those could blow the account. So this is why I don't recommend day trading Bitcoin. If you're going to do Bitcoin, you definitely got to do that as like a long-term investor. President of Salvador? Oh, you're wait. Are we talking about the wait, let's see here. Oh, he's the president of El Salvador. Yes. Okay, so I don't know a whole lot about this guy, but I do tend to sympathize with his position on law and order. My opinion. So there's one opinion that I have about this sort of things that I kind of want to preface this with, and you might find me doing this a lot more often, right? I don't believe that it is proper for me to come in and say, this is the correct way of doing things, this is the way that it should be, and then trying to exert my influence in the world to try and convince more, as many people that that's what the reality is, right? Like, I think I can put my opinion out there, and if people understand the logic of it and they like it, then they can go along with it. But I would never do the sort of thing that George Soros is doing, where he's like, putting money behind all of these DAs for them to kind of like undermine the law in some instances and push his ideology. I think that kind of political power is immoral to wield, essentially, even if it's possible and you have the money, and it kind of, I don't think that we can get away from it. I think it may actually be a necessary part of our society, but I'm not going to engage in that, right? So when I say something like that, this is just my opinion, and I'm not trying to coerce the law to go in that direction. But I am absolutely, when it comes to enforcement of the law, I think that you want to be strict. Basically, the more strict you are, and the more severe the punishments are, the less likely people are to break the law. And breaking the law, hurts the economic opportunities of other people. And yes, what's going on in El Salvador, I think, is a very, very good example. Is this guy came in and he said, we're not going to be nice about this anymore. Anybody that is found to be a gang member is just going straight to prison. And prison is going to suck real, real hard so that nobody ever wants to go there. And what do you know? Like, one of the most dangerous places in the world turned into one of the safest places of the world, like literally overnight. And when I am in charge, I do tend to follow those things. So I want to give everybody like as much freedom, like on Discord, for instance, people can talk about whatever they want, right? But if they spam, immediate ban, straight to jail, straight to jail. I don't give you a second chance if you start spamming in Discord, right? If somebody comes in and they start referencing themselves as the authority in an argument without showing 5 years of trading results, straight to jail. They don't put up with it, because I want people to be afraid to BS like that. So I don't consider it authoritarian, but I do think, because I think that basically we should be relatively lax on things, but then there's this line, and once you cross that line, life should suck for you. That's what I find tends to work, particularly with online communities. Because what happens in online communities is you get a moderator staff, and they're, they allow people that are really toxic just so much leeway, and they will just destroy the community from within. Okay, Seth, have you looked into John Grady's style with order flow, basically scalping treasury notes based on that? Well, that's where I learned from. Or that's where I started learning from. I think that if you watch the information I have on my channel, that I've extended what John says quite a bit. That will be useful. But the other thing that you got to understand is that, like, the setups that he's pointing out in that book, those are like the possibilities, essentially. Like, that's aberrations that you can see on the DOM. That's essentially the major ones that you're going to see. And so they don't necessarily tell you in that one particular instance what's going to happen. And maybe they did at one time, but they don't anymore. So you still kind of have to know, like, you still have to have the context and kind of know what the flows are likely to be and make a prediction, and then use all of that stuff to kind of see, is the order flow actually going in line with those predictions, essentially. So I think that John Grady's basic book is great. It's only like, what, $90? And this is something that I feel like every day trader could read and find use from. What is it? The webinars that he does twice a year or whatever, that's kind of depends, right? Because it's a lot of money and maybe you can afford that or maybe you can't. And the way that I would always approach like education sort of stuff is like, just assume that whatever you're buying, that you're never going to make a cent from it. Is it still worth the price that they're charging? Because some knowledge is just worth having, and I think that the knowledge in John Grady's beginner course is just worth having, even if you never make money from it, right? But for the webinar, it's like $10,000 or something. Is that experience and that knowledge worth having, even if you never make money from it? Well, that will largely depends on how much money you have, right? Because if $10,000 is no big deal for you, then sure, do it. But for some people where you would have to save for years to spend $10,000, maybe that doesn't make sense, right? Yeah, Lario, I'm Brazilian, and this weekend there was a protest by the opposition that brought 750,000 people to the streets against authoritarian measures of the current government and against the imprisonment of the former president who is in opposition. Oh. No, Grady, Grady. Go to nobsdaytrading.com. He doesn't have an affiliate. I tell you what, if he had an affiliate program, I would totally put it in my profile because I really like that beginner book. I think that everybody should read it. Just understand. Don't think of it as like, here are the setups, and I follow these setups, then I will make money. That's not the case. Yeah, so this, L'Oreal, this goes back to this whole thing that, like, the opposition leader, or former president, is being accused of planning a coup. And, like, I don't know anything. So for me, I can't make any sense of that situation, right? Because part of me is definitely kind of suspicious that, like, they could accuse a guy of doing something just to kind of get rid of him, you know? Stocking is short. Well, we sure when we started coming back down, it sure did come with a pretty decent amount of selling in the 5-year, didn't it? But that was just kind of showing, like, okay, the downside wasn't really working, so they started to go to the upside. I kind of started to see some signs that, like, we were going to the upside, but then if we were going to the upside, I wouldn't necessarily expect the 5-year to lead and for the curve to steepen, and that's what was happening, and so I was like, I don't know. And then the 5-year started doing the opposite and started selling and moved to the downside, and that kind of a yield curve shift and made a little bit more sense. Even then, I don't know if we're going to move much more than where we are. It does look like a fairly tight day still. And, the S&P 500 did come back a little bit, but 5 points since the open, they're relatively tight over there as well. So why don't you look at the time and says, so I do. It's hidden behind the camera. You see? So I have them up here behind the camera. Usually don't really show that error window very much. It's just there so that I can click on it if it ever happens. But so I do have tapes. I don't really look at them so much explicitly as much as it is I can just kind of see the orders come in out of the corner of my eye, and it kind of gives me this feeling of like the pace. I tend to be, I forget what they call it, but like sometimes me seeing something can kind of create an auditory illusion that I'm hearing something, and sometimes I will hear it kind of like go, you know. But I can kind of see that with the orders coming in. So that's why I find it useful. But the whole thing is that essentially, let's talk about the Kyle model here for a little bit, right? So the way that the Kyle model approach is basically they split the market into 3 different types of participants. One is the market maker, one is the informed trader, and then the rest is all of the noise traders. So these noise traders are all of these retail traders that don't actually really have an edge, and their trading is mostly random, right? So the informed trader can make money and the market maker can make money, but the informed traders tend not to make money. And so essentially what he did is he kind of set up this experiment where he said, okay, so if I'm an informed trader and I know that at the top of the hour that the treasury will be at 110 even, then and I'll be able to offload all of my volume at 110 even then at that point. Okay. How much would I buy? Because if I buy too much and it goes well above 110 even, then some of that volume is wasted, and I'm paying more in fees and things like that, and I'm not actually making the most money. So there's like an optimal amount of money that I can or a number of contracts to make the most money from this move that we're going to have from here to 110 even in this hypothetical situation. Probably we're more likely to go down, but I pick 110 even because that was an even number, right? Okay. And so then he goes through and does all of this math with the book, and there's some statistics involved and so forth to basically find a formula for like the optimal number of contracts for that person that is the informed trader to trade. And then based on that, the market maker can kind of look at this volume and say, okay, I'm seeing enough of a bent in the market orders towards the upside that I have to adjust my offers to account for that now, so that I still make money and I don't get destroyed by the informed trader. And that was essentially the whole purpose behind the Kyle model. It was Kyle saying, you know, when we do market making, sometimes somebody will know something and they'll push the market up, and we don't get out of the way fast enough, and then we just get absolutely destroyed. So we want to be able to kind of detect when that's happening and adjust for it, right? So what I'm kind of saying is you have all of this volume that's going on out there, and the vast majority of it is noise. But every once in a while, there is an informed trader right there. And so the question is, how can I detect when there is an informed trader and account for that, right? Well, one of the things that you can do is, if there is a really large informed trader out there, you will tend to see a persistent imbalance in the market buys versus the market sells. So seeing strong autocorrelation in cumulative delta and price being strongly correlated with that can potentially predict or detect that a large meta order is being, from an informed trader, is being executed at that time, right? Problem, by the time that you're sure that that's happening, we've already moved up enough, quite a bit, and it may already be over. So it's much better if you know that's coming first, you get in, and then as we're going along, you start to see the autocorrelated order flow. You're like, this is what I'm seeing, I can stay in it, and you just let it ride, right? Okay. Well, I think another thing that could potentially tell you that something's going on is things like a large order. So it's just like if a 3K lot comes through, market order, like why is that? Somebody is really desperate to buy there. That one's kind of an interesting one because that much volume going off all at once often tends to create a liquidity hole. But it does kind of tell you something that, you know, maybe there is a large meta order out there. Like, so you're kind of just watching all of these things and trying and asking yourself, like, okay, does this fit in with my theory that there's a large meta order out there? Et cetera, and you kind of think it through. That's kind of why we say, like Octavia says, stalking a short. That to me is like, he thinks that we're going to continue to get some volume that's to the downside. So he's looking for the right opportunity to get in a spot where he doesn't think that they're going to push it a lot against him. If you can get in and you never have a tick against you, then that would be optimal, right? Like right now, I don't think that I would be selling into 26.5. So there's a pretty good chance that you would get filled at 27, right? And if I get filled at 27, much less chance that we trade 27.5 as opposed to if I sold at 26 and we tick back up at 27, because we keep ticking back up at 27 over and over and over again, right? So that's where you're kind of stocking it. Now you're using the Grady setups and everything to like look for an optimal entry place. Yeah, with this much experience, Bitcoin will be very easy to trade with the DOM. I would say that Bitcoin is not as efficient as other instruments in terms of the liquidity. Yes, that's true. But it's gotten better. Like those Alameda guys, they were trading those sorts of things, and they were making money for a while. But so I think that there are some algo players in that space. So I wouldn't say that it's like completely open for the taking, but it's probably less efficient than, say, the treasuries. It's super hard to make money market making in the treasuries because you've got to be fast, man. You've got to be a robot, basically. The real-time versus rabbit holes thing is hard to deny for me. I have read all his, I'm not sure what you mean by that. His like an end to the bowl or something like that, I think is a really good book, because he's basically saying like, look, this is the way that things go in the professional world. Like in the professional world, you have a watch list and you watch all of these correlated instruments and you ask yourself, why is this happening? As a professional, you have your expectations and then you see how the actual number is relative to your expectations and how the market moves relative to that. So it really, I think that part of what makes Gary so good is that he was a professional market maker. He's the only person that I've seen out there that's talking about this sort of stuff, even if maybe it's really hard to make money from doing it now because of robots, but it's the only one that's talking about it. And the things that he says flies in the face of a lot of retail beliefs. And I worked for a bank and I, looked at the way that things were going, and what he says is exactly what I saw. Right? So that book in particular, you kind of adjust your approach to it. I think that it would help you. Have you watched this podcast on Bookmap Official? I haven't seen that. He says everything else is a rabbit hole and the DOM is real time, and we trade in the now and the future, the past, the 15 seconds, and the price charts are flop. Right. Well, so I think I think the book was an end of the bowl. So let's see here. I think that if I go to Amazon and I search for him, it'll pop up. There you go. An end to the bull, cut through the noise to develop a sustainable trading career. Well, it's only like $15. It's like a 2 to 3 hour book. Like you'll read it in an afternoon. Yeah, technical analysis exposed. So it was originally called Technical Analysis and the Active Trader, and he made that for McGraw-Hill. but then he rewrote parts of it and updated it and put in a lot of the things that he said McGraw-Hill didn't want him to say, and so he just published it himself. And I think that it's available for free. That one's really good as well. Like, the thing that's good with that one is he shows you a bunch of studies that I think show pretty interesting things about the market and technical analysis. Now, the thing that I would point out here with Gary was a market maker. Okay. So he was basically like the kind of guy that the robots replaced, right? So that's the first thing is, you know, he has his course and everything, but he's like, this is the hardest way to trade. And this is kind of like, to some extent, kind of considered antiquated knowledge because the robots kind of ruined all of this stuff. But we still think that humans should understand this stuff, that knowledge should get passed on and not lost, which I very strongly agree with. I don't know if you make money from it, but I do think that it should be passed on. So I really appreciate what he's doing. He was not a momentum fund guy. I think he has a fund now, and I think that he's working with a quant and that they're doing some sort of a momentum sort of a strategy combined with his understanding of the market, which I think is super smart. I think that, you know, the technical analysis was really on like daily bars and stuff like that. You know, I think that the time frame has that there is some evidence of time series momentum, but only when you come out to like a daily basis across a wide array of instruments. So it's just this sort of thing like you can't go from the general to the particular. Is that the phrasing that Nassim Taleb uses? So basically, you can't come in and say, because when I see this particular setup, it goes up 55% of the time in the past, that means that I should predict that in this particular instance that it's going to go up. Right? You're only going to make money on that trade if you're trading it every time that thing happens, essentially, right? And so in terms of it telling you what it's going to do in this one particular instance, it's not really very useful, right? So that's why if your strategy is, I'm going to look at this universe of assets, I'm going to trade it based on my momentum signal, and I've backtested it, and when I'm doing the backtesting, that shows that that's a profitable strategy, then that's an effective way of going about things. But if you come in and you say, I want to trade NVIDIA, now let's look at the chart, and based on what I know about chart patterns, I'm going to predict whether it's going to go up or down. Waste of your time. Not going to be very effective at all. That's the technical analysis of it, right? So keep that sort of thing in mind when you're reading stuff. Like when you're reading the Jack Swagger books, right? Just think, these are all momentum traders that are trading, you know, like positions where they're holding it for weeks and months. Not necessarily day traders, right? It'll put all of their comments in a completely different perspective for you. Let's see here. That technical analysis for algorithmic pattern recognition by Pomodoros. I'll have to look it up. Seth, do you add COT? No, I don't. I don't really look at that. So like those reports that come out, those are, there is some useful information in that. I kind of want to do a little test to see if the commitment of traders or the, what do we call it? The open interest reports, if looking at those and doing a trading system based on those, what that might potentially show could be interesting. But for day trading, it's kind of like, you know, by the time you get it, it's not relevant anymore. So for day trading, I don't know if that is really very useful. by the time it comes out, you should already have a pretty good idea of what it's going to say. Now, you might also be talking about like those footprint charts where they have these COT numbers. And there's this really weird way that they calculate it based on the cumulative delta and everything. And I've done a ton of looking at that as well. And even like trying to test it and everything. But as far as I could ever tell, it was all just random. And that it had no use whatsoever. I've never really met somebody that really was like, they understood what it meant and were trading off of it and really believed it. It's always kind of like a, oh, well, here's a peculiarity. Let's look at that one. Okay, so I'm just going to pull this one over. That does look like a more serious book. This book is to resolve deficiencies and limitations that currently exist when using technical analysis, particularly technical analysis used either by academics as an economic test of the weak form market hypothesis or by practitioners as a main or supplementary tool for deriving trading signals. This book approaches TA in a systematic way, utilizing all available estimation theory and tests. This is achieved through the development of a novel rule-based pattern recognizers and the implementation of statistical tests for assessing the importance of realized returns. Okay, cool. Oh, do we have some news coming through here today? I thought we were clear for today. Oh, new home sales. New home sales units, actual 0.661 versus an expected 0.68. So that gives us a new home sales change month over month of 1.5 versus an expected 3%. So lower than expected. That would be like a positive, but the market did kind of move around, but actually seems to be selling at the moment. So, okay, let me finish reading this synopsis. More emphasis is given to technical patterns where subjectivity in their identification process is apparent. Our proposed methodology is based on the algorithmic and thus unbiased pattern recognition. The unified methodological framework presented in this book can serve as a benchmark for both future academic studies that test the null hypothesis of the weak form efficient market hypothesis and for practitioners that want to embed TA within their trading investment decision-making processes. Okay. So that sounds interesting to me, but that is kind of like, that sounds more to me like I run this on daily charts, right? Because the question is still, oh wow, this is an expensive book, by the way. $100, and not very many reviews on it either. No customer reviews. 1 rating. Is that actually the best version of this? 2016 edition, huh? I've read a book or two that looked like this, and it was kind of like underwhelming when I actually read it. Oh, that's the only one. Well, I have to search more. See if I can find more about the book. What was his name again? Prodromos. Why, he said the workability of patterns were around 40%. What does that mean? The workability of patterns were around 40%. Meaning that it did what it was supposed to do 40% of the time, or the difference between the winners and the losers was 40%. I do think that human subjectivity is a problem. that like none of these, you know, all these people talk about like price action patterns and stuff like that, and it's like, okay, but like backtest it. And like the ones that I've found ways to backtest don't work. Yeah, it was a university thesis, but it's like 200 pages. So it does sound like a really big study and not a. But I the point that I'm trying to make is that unless they're using intraday data, it doesn't really answer the question that's most relevant to us, right? Because what I'm saying is there appears to be some evidence in support of the time series momentum that using a well-crafted universe of assets on daily, weekly, or monthly charts. But I see no evidence in support of identifying some pattern on a 1-minute chart and trading it off of that. But it does sound like this is the guy. I've heard of this where they kind of found a way to kind of like backtest, you know, like how do you identify a head and shoulders statistically? And it kind of looks to me like he has developed a system. As I put this in my queue. Let's see here. I have so many things I should be reading, but kind of been taking a break and I need to get back into it. Last time I was really strongly reading was like around when Dune came out. And I remember holding, I think I was holding Ethan. And he was still like an infant. So the question is, can I get into a focused enough kind of happenings to be able to read during the day, during the evening? Right now, it's kind of like the children are such a ruckus that you kind of feel guilty doing anything because then the other parent is just watching them and dealing with it. Okay. So on a sample size of like 1,000, what was the percentage that it predicted it? So it's like, okay, here's the pattern. Is it going to go up or down? And what was the percentage? Like it went up 55% of the time? Because I went and found the book and I'm just like thumbing through it. And like I'm seeing stuff about Garch models and stuff like that. So like moving averages, exponential moving averages. Doesn't look like anything that would help us on intraday. Right, because if the question is there time series momentum? I think the answer is yes. on daily bars. He's also more interested in like the efficient market hypothesis, which is like we already kind of know the answer to that one too. Procedures. Assessing the performance of trading signals. Identifying horizontal support and resistance levels. Zigzag patterns, circular patterns, technical indicators, statistical assessment. I feel like I've read this before, actually. This all sounds very familiar to me for some reason. Tell you what, the treasuries continue selling here. I wonder if, some of the things on my cumulative deltas don't 100% make sense to me. But I'm wondering if the activity that we're seeing right now has more to do with the rollover and so forth. Because I think there's probably a lot of rolling over today. But it is moving down, and it kind of looks like it's going to move back into the area that it was at, though. So I don't know if this move is telling us a whole lot, but good job for any of you guys if you went short. I know Octavius was stalking a short. I hope he caught it, because, that last few ticks look really good. Well, the fractals appear in nanoseconds also. So I have I don't know about a pattern on a nanosecond, but I definitely have seen some stuff to suggest to me that there are like patterns and things that you can use on very, very short time frames. So it's kind of like here is the X is like the time frame. And like this is like Warren Buffett, and this is like HFT. Okay, and then right here in the middle is, I'm gonna say, it's like day. Okay, so like then Y is gonna be like known profitable strategies on this. And I think it goes like this. I think it goes like, there's like on the super, super high time frame, there's stuff to do. And then when you come over to like less than a day, actually, let me draw that a little bit different. I think it goes like this. And then kind of the higher time frame you get, the more it kind of, until when you get to the day, there's kind of like, So this right here is like, this is momentum. Momo, right? And this area over here is where we want to participate, where we want to be in it for like 30 minutes or more. And what are sorts of things that would predict? Well, the only thing that I know of is being informed. That we've and being informed is kind of like, you can't really test or falsify, so there's a problem with that. You can't empirically test that per se, right? Because that all depends on you and like how informed you actually are. Logically, we can come in and based on our understanding of the market, we can say if you really are truly informed, then you should make money. It's just you don't always know if you're informed. That's kind of the problem, right? But ones that are actually testable, you have to be like super short time frame. And most of the ones that are super tight that are in here are based on the book and not like a price pattern. Well, you got to be careful with candle types. So, because you might just be, sorry, what is the term for it? Data mining bias. So I've seen lots of people do stuff with candles and they don't realize that there's a data mining bias to it. Because basically what you do is you come in and you say, I'm going to test all of the different candlestick patterns and then which one worked best in that time period. But what I think you're going to find is that, like, if you take a candlestick pattern and then you say, okay, that worked this year, how has it gone over the last 10 years? That performance for the 1 year never carries out. That each year there's a candle type that does the best. Right? It's the same thing as, like, shooting the side of a barn a bunch of times and then looking at where the most of your bullets hit and drawing a target there and saying, look, see how good I am at shooting? That's what data mining bias is. Also, PineScript I've never seen a backtest on PineScript that there seems to be something about PineScript that with the way that people use them, it's not accurate. I don't know why it gives the results like that, but the PineScript backtester seems to be too generous for some reason. So just going through this book and reading, like, the contents, there's probably are some, I would probably have some concerns about data mining bias in this. That if he's, like, going through every type of pattern that you can, and then how does it actually work? Let's see here. Let's read one section. 77. Oh, he even has the Python code. That's cool. Let's see here. The proposed HSAR algorithmic method proposes principles found in the literature for the visual identification of SARs. I think they're talking about horizontal support and resistance, right? Since most other articles identify support resistance levels as the previous lowest price, and the comparison of our findings was made with those presented in Versio and Osler, which is interesting. The reason that these two studies are used as a benchmark is that the evaluated support and resistance levels had been published by proficient firms rather than calculated by simple arithmetic mean rules. After identifying HRs, it was assessed whether these levels were efficient trend reversal predictors and if they could generate systematically abnormal returns. Results presented corroborate the most basic conclusions reported in the aforementioned studies of comparison regarding the bounce analysis. Stock prices of the examined dataset bounced on an estimated support levels more often than would have occurred had the horizontal support and resistance been randomly chosen. Okay, so that's interesting, as they say where it bounced, where it bounced compared to, like, randomly picking a line. Okay. This constitutes support levels as an efficient trend reversal predictors. On the other hand, estimated resistance levels failed to outperform the artificial ones. The superiority of support levels compensates for the poorer performance of resistance levels, and this affects the overall picture of horizontal support and resistance, which was found to be generally efficient. Okay, so I think that means that it's not really very effective of a trading strategy, but let me see if that's correct. Furthermore, it has been examined if the number of locals that a signal horizontal support and resistance has any importance. The number of these locals is treated as a strength value for each HSAR, and results indicate that these strengths play no major role in predicting trend interruptions. Bounce analysis confirms some of the main findings reported in Osler for currency markets, with the difference that this study scrutinizes further the performance of the support and resistance levels separately. In the part of profitability analysis, two different trading rules are used: trading after bounces and trading after penetrations. The first trading rule outperforms the second one as expected. So trading after it bounces off of a line is more profitable, but still, even without considering transaction costs, it fails to generate statistically significant excess returns. That's what I thought. This finding confirms the results presented in Curcio et al. Furthermore, no consistency in the profitable performance is found to be examined the stock price series, which means that stocks that generate abnormal returns fail to beat the market across subsequent subperiods. In an effort to explain the aforementioned results, the better performance of support levels can be attributed to the generally long-term bullish trend that characterizes the stock's prices series considered. More precisely, a positive trend has two main impacts. First, the price has more or less chances to bounce on support or resistance levels rather than breach them. And second, it generally generates substantially high mean unconditional returns, which are greater than the positive trading results resulted by HSARs. Thus, the performance concerning the trend predictability is somehow elusive since the profitability tests implemented fail to provide evidence of abnormal returns compared with a simple buy and hold strategy. Okay, so he used a bunch of words there and everything, but I think what he was saying was that when we back tested it, we found some evidence to support the idea of support and resistance, and that support was more effective than resistance, but that when we turned it into a trading strategy, it was not profitable. And that he thinks that the reason that they kind of got these results that suggested that there was like support levels was really because they were testing it on stocks, and stocks have a tendency to move up. And that's why the support levels were working better. But it doesn't generate excess returns still. So that's about what I would expect them to get. Very interesting. But I like that he has like this HSAR. I wonder, because it sounds like he was doing it on stocks. Wonder if I take his code, because it looks like this is Python. Wait, let's see here. Function results. No, that is not Python. No, wait, is it? I don't think it is. It's probably, is that R? Let's see here. Does it say? Code. MATLAB. Oh, really, dude? Really, dude? No. Tell me now. I don't know if I want to go through and then try and backtest his things on like a momentum portfolio if it's MATLAB. If I have to. Oh man. I'm not really very familiar with MATLAB, so I don't know how hard it would be to convert that over to Python or R. Tell you what, there's some things about R that are kind of fun. It's kind of sad that Python became the machine learning way to go instead of R. But whatever. Taking a look around, just making sure there's... Oh, there is. So it looks like Bitcoin is having a little bit of a run this morning. And the dollar, too. Maybe ChatGPT can help, maybe. Yeah, this is just like coming back to this thing about artificial intelligence. I keep seeing all of these. I really think that the tech bros are overselling it. They're all like, you know, in a few years, everybody will be a programmer. I really don't think that that's going to be the case. So I'll give you an example. I've been dealing with issues at work where the code that was being used was resulting in high memory usage. It was like they would go and read a file, like a video, and like read the whole thing into memory and then do a bunch of different things on it and then go. And every time that they did something with it, they were like using these helper variables and stuff. So like that whole huge several megabyte piece of data is getting copied multiple times, right? I see that happen. And, you know, eventually it gets to a point where we have to come in and address it, right? So how do you do that kind of analysis and find where the problems are. And like, there's all these tools to help us do that, right? But like, we have to go and do the analysis and like fix the code. ChatGPT doesn't understand what it's giving you. Is just guessing based on other code that it's seen. It doesn't understand the code, and it certainly doesn't understand the performance implications of it, right? And what I'm finding is that the more developed the system becomes, the more those sorts of things start to become a problem, you know? So I just really don't see, I think that there's going to be a lot of, you know, you're in a specific domain and you're programming specifically for that domain. And maybe those guys don't need to be, you know, there can be a lot more people that are doing coding kind of with the assistance of ChatGPT, and those guys will be a lot more efficient. But like getting rid of the programmers, I just don't see it happening anytime soon. I wouldn't trust the things that the computer gives you. And if you go into ChatGPT and give it a bunch of code and tell it to convert it, even when you're just telling it to convert it, I highly doubt that what it gives you will compile and work correctly. So you still have to know what's going on. Shall we read another one? So horizontal support and resistance one was the most interesting because that's kind of, I think, the one that people really believe in. Basically, the funny thing about it is that my reading from that was that he was basically saying, just buy the dip. Just buy the dip. Like, forget support and resistance, just buy the dip. Okay, so that was horizontal patterns. What about zigzag patterns? 114? Now the zigzag patterns is a little bit more interesting, and he's using a slightly different method to do it than what I have done. So that's okay. In this chapter, algorithmic methodologies for identifying the bearish and bullish versions of 6 celebrated technical patterns were proposed and presented. In particular, the proposed mechanisms confirm a pattern's formation when sequences of regional locals fulfill a number of quantitative conditions. These conditions were designed from theoretical descriptions of the examined patterns as found in the literature. Beginning with the identification of the HS pattern, it was first confirmed that the proposed algorithm successfully identifies the pattern in price series where it had previously identified via visual assessment. Subsequently, the algorithm was tested on individual series generated by the discrete time version of GBM with differential volatility rates and rolling windows with, surprisingly, the pattern was identified approximately 22% of the time. This finding suggests that since a technical pattern can come into existence out of practically pure randomness, it should also be expected to appear in real series. The relation between the number of patterns identified and the various values for, drift, rolling window, and widths was also examined. It was found that the number of identified head and shoulders patterns was positively related with volatility rates and negatively related with the width and absolute value of differential drift. In addition, the choice of the width has been discussed as a methodology for defining the width of the RW in the identification process. Blah, 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 blah. 3 different cases of price evolutions after the realization of a zigzag pattern have been identified. The first case where the price target set by the pattern is reached, the third case where a stop loss condition closes the initial trading position, and the second case where none of the above happened until a predefined time limit where the initial position is closed. Relative frequencies of these cases generated from real and simulated series were reported and statistically compared briefly. Results indicate homogeneity among frequencies that come from real and simulated series for almost half of the exam patterns. However, frequencies regarding case 1 were statistically significant greater when obtained from real series rather than simulated ones in 6 out of 12 patterns versions. That does not tell me if it was profitable. I did not understand what they just said there. Arma or Garsh models. These ones, prediction of change in direction, independent prediction of change in direction, K-stat test for normality. The zigzag pattern section of it did not. Dynamic time warping for pattern recognition. Let me go back. 107. These returns represent the average returns generated by identified patterns and are not expressed on a daily basis, bearing also in mind the fact that no transaction costs were considered. These returns, although positive, they might not be sufficiently large to constitute zigzag patterns efficient. So far, I'm not seeing anything in this paper that is like, hey, technical analysis works, right? Okay, in this chapter, the predictive performance of the technical patterns presented in chapters 4, 5, and 6, along with that of technical indicators presented in chapter 7, was assessed. This set of trading rules was applied on 18 major world market indexes. The efficacy of technical analysis was tested by both implementing ordinary statistical tests and a bootstrap methodology. The first include t-tests and Bernoulli trials. However, while ordinary tests may assume normal, stationary, and time-independent distributions, real price series distributional characteristics deviate from these assumptions, presenting leptochoric distributions, autocorrelation, and heteroscedasticity. To deal with these issues, bootstrap tests are carried, whereby the performance of the TA's tools observed in a real series is compared with the one exhibited in the simulated series. 3 different null models were initially used for generating these random series. However, AR was not qualified to proceed the bootstrap assessment since it failed to produce IID increments when adopted on the original series. The performance of each technical rule was a success by examining the returns generated by bullish buy signals, bearish sell signals, and their combination, buy-sell signals. Regarding the buy signals, it was found that 71% of the cases generated positive returns with frequencies greater than a fair level of 50%. Considering only significant cases at a level of 10%, this percentage dropped to 25.38%. Finally, considering the cases that generated mean returns significantly greater than the unconditional mean, the corresponding portion was even lower. Regarding cell signals, it was found that the portion of cases that generated means returns significantly lower than the unconditional mean returns was greater than the corresponding portion of cases that generated negative returns most of the time regarding their size. This implies that even though bearish rules signal most of the times positive returns, when they signal correctly negative returns, these returns are greater in absolute values than the corresponding positive returns signaled by bullish rules. This finding can be attributed to the aforementioned black phenomenon overall. So I think that they're talking about markets, move faster when they move down. Overall, trading signals generated mean returns by the expected TA sign most of the times. Buy and buy sell signals generated positive mean returns in most cases, whereas the reverse stood for sell signals. The whole analysis has been repeated with various short-term holding periods. The results showed that the TA tools incorporated in this chapter have generally performed better for shorter holding periods. But I think that shorter holding periods might be like a week, not like 5 minutes. It asserted that technical patterns occur seldom but are reliable. Results of this chapter are aligned with that statement. On average, technical patterns outperform indicators in a manner that they generate greater in absolute values mean trading returns. The subjectivity embedded in the identification of technical patterns may allow for short time delays for the incorporation of new information prices. Here, new information refers to the realization by the markets of a pattern's fully information. Unbiased recognizers, like the proposed identification mechanisms of this book, may take benefit from such time delays, but pattern's superior performance is compensated by their low frequencies of observations. This is a very important aspect to consider since indicators produce numerous signals which forces the mean trading returns to approximate the unconditional means. Okay, so that concerns me that it says that the actual true patterns using their algorithms don't happen very often. It's worth mentioning some issues that the reader should consider when interpreting results. First, results presented in this chapter regard only particular dataset used. It is not safe to generalize them. Second, parameter optimization was not performed, and parameters values used in defining each trading rule were the most commonly used in the literature. Third, volume confirmation was not considered in generating trading signals, although TA asserts that volume is important in confirming trading signals. It would be difficult to embed volume confirmation in a bootstrapped simulation series. Right. So they're saying that when they're doing it, like, they're basically creating a random chart and testing it against that random chart. And how do you put volume on the random chart? Because if you just pick a random value for volume, that wouldn't make any sense, because volume definitely does not appear random, Secondly, transaction costs were not considered in this study, which would exacerbate even further their predictive performance of TA. So the problem with that one is that they didn't necessarily say which ones. Maybe that was further up. Let me come to their tables. See, these holding periods are days. Holding periods up to 15 days. See, because my assessment is that technical analysis on intraday data is useless. That's my assertion. Or that's my theory. This does have some methods of kind of testing this sort of stuff that does seem useful, though. maybe if I actually like implemented their algorithms and tried it, that it would give me, I would understand some of the things that they're saying a little bit better. But like, I'm not seeing anything in here that really makes me want to try them. Not right now, at least. Put that in my queue. I got, I think, 1 or 2 other things I want to read first before I read that, though. Like, all the way through. Just reading the conclusions and stuff. Let's see here. Reading back here at some of the other things more said. Well, I find it interesting that you're looking at all that. You sound like you're more interested in the cryptocurrency stuff, though. Did you roll over today? So I went and I checked June in the 10-year treasury and the liquidity was not there yet. So I have decided to wait until tomorrow to move my DOMs over. But NinjaTrader automatically rolled over my charts. And I do wonder if some of the action that we've seen here today, because we did get a pretty decent fall from 28 down to where we're at 23. That would be the sort of trade that I would normally be looking for. I guess I probably could have traded that one potentially. It would have been 10 bucks, right? But I wonder if some of it is due to the rollover. Oh, I see somebody in Discord were also asking about COT. But I think you're talking about commitment of trader reports. I don't know. Liquidity for both ZB and UBR in June? Yeah, I only looked at ZN. But like, it's not, remember that it's, when you look at the calendar, it's 3 days before first call, right? So we are 4 days before first call. So the first of the month, rather. So even though I think that Zian told me to roll over and everything, but I think that its rollover is a little bit incorrect, basically. I think that you'll see most of the volume will roll over tomorrow. That they're starting to roll over tomorrow, and that they're starting to roll over today, and that by tomorrow there will be more liquidity in June. Well, I got about 5-7 minutes left here. The S&P 500 has been awfully tight today. There's a decent move down in the treasuries, but, you know, because it's a retracement of Friday, I don't know if that's really a big deal. The only thing I really see going today that looks significant is Bitcoin. That jump in Bitcoin looks significant. They're trying to pump that thing hardcore, for sure. But the rest of this kind of looks like if we come over here on the treasuries, for instance, right? Like we got the breakout that we were looking for, and then ever since then it's just been range bound. So hopefully, you know, if we were to do the technical analysis, right, we would say, okay, here's the support and resistance. Support and resistance. And hopefully it will go, right? That's what you'd be looking for. But I don't think that it's very effective at predicting that sort of stuff. So I do kind of suspect that the next leg could be down, though. That's why I continue to hold my short. Not because of the chart, but because of what I know about the market. Ukraine's top spy chief says Navalny died from blood clot, rejects murder narrative. That's, I don't know, that's still a little suspicious to me. I find it really weird that this move down really seemed to happen after the new home sales, because the new home sales disappointed, but that would suggest up, not down. New home supply is rising, and so are mortgage rates. That's interesting. Was it because the new home supply rising that would maybe bring prices down and make it so that more people are able to buy, and thus enabling the market to handle higher rates? X hiring has reached over 1 million job postings now live on X. Wait, so after firing everybody, now they're hiring like mad? I don't know. I tell you what, every tweet that comes out of Elon Musk is kind of like interesting and like, what is going on to me? So like the other day he was complaining about how you have to use a Microsoft account to log into Windows, and that surely they must be, you know, using everything that you do in the OS to train machine learning and stuff. And I'm like, okay, like you didn't know that you have to sign in with a Microsoft? You haven't used Windows? Like what? That was really bizarre to me. Equity fund inflows reached 75 billion over the past 5 weeks, the strongest in 2 years, according to Deutsche Bank, including 15 billion last week. Bitfinex says Justin Sun Fraud just got the command from Tether Fraud to pump it with his Tron tethers. So he thinks that the pump in Bitcoin is coming from Tron. Okay. Brooks Live says Bitcoin is about $200 from breaking the range. Surely people are keeping an eye on it then, huh? Goldman, how could oil break out of the $70 to $90 range? A sustained drop below 70 would likely require much weaker demand and a shift in Saudi's strategy. We take profit on the short 70 put and long $80, $90 call spread on Brent June 24 and extend the trade to December of 2024. Well, I think that's good for today. I do kind of look back at this and wonder, should I have taken a short? Because, I mean, I was thinking short, but I don't know if I really actually had a good enough idea that it was going to go down to justify taking a trade like that. Like, I think if I was more actively trading today, that I probably would have gone short and made money, but I would have be saying, like, I probably just got lucky, right? But, you know, I think that things might be a little interesting until the end of the month. It's a pretty big bid there at 23.5. That's been there for a while, though, hasn't it? Not quite sure what to make of that. Before you go, do you have a video on how you set up your 10-year treasury note charts? So I do have a video. I don't know how far back it is, but I do have a video where I go through my workspace. And I do explain, like, you're talking about these over here. If you want to know what the deal is with these, I'm just using a 1-minute chart. I'm not using candles. I'm using boxes. And then I have my spread on and cumulative delta, and that's basically it. This one also has inventory. The ZN has the inventory cost basis indicator on it too. So, but I have a video that goes into more detail, kind of more about why I have it set up the way that I do. So just go look on the main channel page. Okay, guys, I'm going to get going. I will see you tomorrow. In the meantime, stay excellent.